Hello, everybody. This is Chris Roger, financial advisor with Bayntree Wealth Advisors, and today we're just going to be going over some budgeting basics. For a lot of you, you're probably very familiar with this type of information. For some of you, this may be new, but we'll go through quickly today some things to consider and things to think about as you really prepare for your budgeting and debt management. So I always like to encourage people, hey, you want to treat your own personal financial picture like a business. A good business knows how much money it has coming in every month, how much money it has going out every month. Then you have to think about, okay, what are your expenses that are mandatory, that you have to have, the income that you need to make to put food on the table, keep a roof over your head, and what are those excess expenses, those kind of luxury expenses, those additional things to help maintain your standard of living. You want to have a good grasp on that. What do you have coming in every month, and what do you have going out every month? What is your monthly outflow? From there, you're either going to be in one of three situations. You're going to have a positive cash flow. You have more money coming in than you do going out. Certainly, that's a position we all want to be in. You're either going to be break even. You got just about as much coming in, just about as much going out. So there's not really a lot left over. Or you're going to be at a deficit where you're spending more than you're making on a monthly basis. And that's where you could get into some trouble. So you want to understand, what do you have coming in? What do you have going out? And what is your free cash flow? Then you have to think about, well, with this excess cash flow, what should I be doing with it? Well, good rule of thumb, you want to have at least 3 to 6 months worth of your living expenses set aside just in cash. They don't need to be in stocks. They don't need to be in ETFs. There's nothing wrong with having some cash at the bank for a rainy day to prepare for whenever life throws things at you, whether something happens with the car, new roof, you got to fix the fridge, whatever the case may be. You want to have some excess cash there. Good rule of thumb, usually 3 to 6 months. For those of you that may have some excess debt, maybe it's credit card debt, maybe it's student loan debt. We get a lot of questions on, should I pay off my mortgage? Should I pay off the car? All of these different things. So I would encourage you to look at, there's a couple different strategies. Say if you do have a large amount of, let's call it credit card debt, or a combination of maybe some credit card debt and student loan debt. There's kind of two ways to go about it. You can look at the interest rates on all of your current loans. Hey, which ones are the highest? And I'm going to pay those off first, right? Because those could be the most expensive. Now, there's other strategies that say, well, maybe I'm just going to pay off my smallest outstanding debt first. And that gives a little bit more of a psychological win for you, because you see that debt going away, you see it get eliminated, and then it kind of simplifies things because it's one less thing for you to worry about. So if you need help understanding how to determine what your free cash flow is, do you have enough savings set aside? Do you need more? Do you have too much? Or if you need help with debt management or debt elimination strategies, reach out to us here. Again, my name's Chris Roger. I'm one of the advisors here. You can reach out to myself, Jonathan Jangle, or Brian Hartstein. We're all here to help. And you can reach out to us. There's no cost. There's no obligation to reach out and work with us. We're here to help everyone. So if you have questions, give us a shout. And again, we look forward to hearing from you guys soon. Thank you.